Kunal Bothra joins in to answer all our stock queries, and Firoz Aziz is with us to answer all our personal finance queries. Good afternoon, gentlemen. Thanks very much for speaking with us. First up, let's get a caller who's actually tracking one of the bigger losers today. That's Hindalco. Mohammed Nuruddin calls in. Hi, what's your question?
Hi, ma'am. Actually, I have got the Hindalco shares last month, ma'am, at the rate of rupees 166.
Okay.
So I have seen this in the morning today. It goes to 144, I think. So what I have to do right now? Should I wait for my, what I have got for, or I have to sell it?
Okay, fair enough. Actually, there's a lot of fundamental news flow actually on Hindalco. But Kunal, let me come to you for a technical check on this stock. How's it looking? Should someone remain invested, or is there anything else from the metals pack that you would like to suggest?
I think Hindalco has not broken its support, so I think the investor can feel a little bit safe. It's not cracked the way these metal stocks, especially the larger cap metal stocks, have done over the last 7 to 10 trading sessions. So I think that's some bit of a respite. Of course, Hindalco has already been beaten down before that. But I think that the good part is that the investor's purchase price is not at 180 or 190 levels, where he probably would have been in a state of panic. But I think at this point, I think there seems to be a chance that the investor can hold on to its investment. 140, 138 seems to be a good support for Hindalco over the weekly or the monthly chart. So I think till the time that level does not get breached, I think if the market or the panic in the market also subsides, I think you might see a reversal happening for Hindalco. So I think the advice is clear. Hold on to it. I think till the time it does not break 138, I think you should hold on to your investments.
All right, then maybe you could go in there and hold on to Hindalco for a tad bit longer. Stop loss at 138. If that level breaks, and it doesn't look too good, but otherwise maybe a bit of a bounce once the market momentum turns in your favor as well. But our next caller is already standing by, so this is another metal stock, I think. Suresh calls us from Jaipur. He has some investments in Tata Steel. Hi, Suresh.
Hi, good afternoon.
Good afternoon, Suresh. How can we help you?
Calling from Jaipur. I do have a Tata Steel 2,000 shares.
Okay.
Valuing 425 rupees.
All right. When did you buy these shares?
2011.
Ooh.
I have done 2011 to 2013.
Okay, so you have been buying it gradually, or did you pick up the full 2,000 at...
No, gradually. In regular intervals.
So Suresh, I believe that maybe you would have seen levels of even 200, 250, and then you saw the stock go to 600, but your average price should be around 425.
Correct. Actually, we applied in FPO 610,
okay.
And we allotted the 300 shares. So that's why when the market fall, the share fall, we intend to buy those shares now.
All right, no worries. Can you hold these shares, but Suresh, you've been holding on for the last few years. You can hold it for another couple of years?
Yes, we can hold.
All right, great. At least that plays in your favor. So, Kunal, let me come across to you. Here's an investor. He's seen those highs. He saw the lows as well. Unfortunately, right now, he's not making too much money, and he's got 2,000 shares, but he doesn't mind holding it. So that's a good thing. How should he trade it? What's the stop loss? What levels can he look at?
I think he's seen the worst and the best phase for Hindalco, for Tata Steel, and I think the fact that it went to below levels of 200, and then at one point was just about touching that 600 mark as well a couple of months back. So I think the worst and the best phase for Tata Steel, I think that's happened. The best part is that the investor has still managed to hold on to Tata Steel. So I think if your vision is long term, and if you're looking to build Tata Steel from a long term perspective, I think even levels below 400 could be a good level where you can start averaging out your holdings. Don't buy 50% or more than 50% of what you have currently. So I would say probably have a staggered approach. You look to add probably 20 to 25% of your current holdings which you have. But I think from a long term perspective, the fact that many of these metal names have corrected significantly, I think given the fact that the next 1 year, 2 year could be very strong for Indian markets once again, I think Tata Steel could be one of the good returns bet from a long-term perspective. So I think the advice is very clear. Hold on to it. I think if you can average out, at least 25% is what you can average out at this point.
Okay, Suresh, that's the advice for you. Remain invested in Tata Steel. Any price or any dips that you see below 400 like it is currently is the level that you can use to average your holding. But like Kunal said, make sure you don't average more than 25 or 50% of your current holding. So right now you have 2,000 shares. Look at buying perhaps just another 500 or max another 1,000 shares. I hope that advice works for you. Another caller on the line with us now is Pravesh Tukral, who calls in from Pune. Hi, Pravesh.
Hi. Good afternoon.
Good afternoon. What's your question?
Can you please tell me a good close-ended mutual fund to invest in?
Okay. Any specific reason you've chosen a close-ended fund?
Not a...
Okay, just for the benefit of our viewers, let me just tell you the difference between open-ended funds and closed-ended funds is that open-ended funds are funds where they buy and sell their securities on a continuous basis, and therefore you have more flexibility. In a closed-ended fund, the house will sell or repurchase they'll sell only a fixed amount of units, and that too not after the NFO is closed, which is a new fund offer. So it doesn't have the kind of flexibility that the open-ended fund would have. But Firoz, what's your advice? Is there any good closed-ended fund coming up that you want to advise, and do you also want to suggest to him that he's stay in that close-ended fund, or should he choose an open-ended fund?
See, what's happened is over the last few years, about 7-8 years, closed-ended funds have been into the flavor, and there have been a lot of them which have been launched. If you do an analysis of all of them, Pravesh, you see that there's a large gap between the closed-ended fund and the open-ended fund's performance. The closed-ended funds, ideally, because the money is stuck there for about 2 years, 3 years and 5 years, the performance should be better ideally. On the contrary, ironically, it's lower than the open-ended funds of the same fund manager. If you analyze HDFC's closed-ended and open-ended funds, the open-ended funds have done better. So there's no point you compromising on your liquidity and getting a lower return. So I would say the risk element is higher in a closed-ended fund because you can't redeem your money depending on the market's contemporary situation then. And the dividend histories also for a closed-ended funds have been lower. So I would strongly suggest that you don't buy yourself a closed-ended fund, but buy open-ended funds because they will leave liquidity at your discretion. And in the closed-ended fund, you can probably look at one of the funds which is there, Reliance Capital Builder. It's a reasonably good closed-ended fund. Otherwise, you can look at buying yourself open-ended funds in the large cap category. Franklin Blue Chip Fund would be one of the best large cap funds going forward, Pravesh.
Tej Prakash Jangir calls us from Pune. He has some investments in SBI. Hi, sir.
हेलो सर।
सर आपका सवाल क्या है?
सर मैं ये पूछना चाहता हूँ, मैंने 317 पे 200 शेयर्स लिए थे SBI के, तो सर मैं उनको होल्ड रखूँ या निकाल दूँ क्योंकि मार्केट बहुत डाउन चल रहा है?
राइट सर। सर आप ट्रेडर है, आप इन्वेस्टर है, लॉन्ग टर्म के लिए होल्ड कर सकते हैं 1 साल 2 साल के लिए?
हाँ नहीं, 1 साल के लिए होल्ड कर सकता हूँ सर।
1 साल के लिए, ऑलराइट। Kunal, here's a trader. He's bought one of the stocks that were running so hard, but unfortunately from his buy price, the stock has corrected a good bit. He can hold it for at least a year. Should he, after such a sharp correction, should he get a bit of a bounce back?
I think the concern here is his purchase price, because I think that's exactly very close to the top for SBI, looking at the last 3 weeks of performance. So I think giving a view particularly, and the fact that the investor has bought around 200 odd shares. So even if you try and average, your average would come down to just about 305, 307, even if you average at current level. So I think the ideal trade over here should be, the investor should try and wait. If SBI corrects to levels of 280, I think that could be a good level where you can average. You can probably look to average more than 100% of your holdings which you currently have in SBI, and probably look to bring your purchase price to just around 300 or below that. I think then the investor has a good potential to gain on the upside for the next 1 year. So I think the position over here should be to try and wait. If SBI corrects to say 280, average out and bring your purchase price to below 300, then you can position yourself for the next 1 year, look for a target of at least 350 to 370 on SBI for the next 1.5 year.
Okay. तेज प्रकाश जी, आपके लिए यही राय है हमारी एक्सपर्ट की कि जब भी आप SBI में गिरावट देखें 280 के लेवल्स तक, उस वक्त आप एवरेज करिए। ऑलमोस्ट 100% जो आपके पास अभी करंट है, जैसे 200 शेयर्स हैं, तो आप 200 तक और ले सकते हैं और अपना प्राइस चाहे तो 300 के करीब लाइए, और फिर 1 साल में जो टारगेट दिख रहा है वो 350 और 370 के बीच में आपको देखने को मिल सकता है। तो अभी आप फिलहाल इसमें बने रहिए और 280 पे एवरेज करने की कोशिश करिए। just a quick word also on the market, because the Nifty has now fallen well below that 8100 mark. So it's a 134 point cut on the Nifty. It's standing at that 80 odd mark. And look at some of the culprits. You pull up the contribution index, and over there you'll see the big five actually taking away a large chunk. So there's ITC, which has now extended its losses. Look at the intraday chart of ITC. You'll see the cut over there deepening as we speak. There's ICICI Bank, HDFC, SBI, the HDFC twins rather, as well as SBI. You'll see big cuts over there. So almost just the top five stocks in the Nifty are taking away close to about 60-70 odd points as we speak. And on the gaining front, there's only IT stocks which are just fighting a lone battle, but clearly not enough even as we speak. Dr. Reddy's is another one. Tata Motors, Sesa, Sterlite. These are all stocks none of which are doing well in trade. In fact, look at NTPC in the last few minutes. It has seen a cut of about 1%. IndusInd Bank too has seen some incremental selling, as has the entertainment. We'll try and get some more a sense of what is actually happening in the market in just a bit. But before that, another quick word from one of our callers. PS Raheja has called us from Nagpur. Hi sir, what's your question?
मैडम मेरे पास तो PNB है 1125 पे मैंने 50 शेयर लिया है, तो उसमें आगे 3-4 महीने में कैसा रहेगा?
Okay.
और किस रेट पे एवरेज करना चाहिए?
Okay, Kunal, on the other big PSU bank, SBI, your advice was to average. Would you concur that for PNB as well, someone can average? His time horizon, though, is just for another 3 or 4 months.
I think exactly. I think the fact that PNB very strangely has not corrected the likes of SBI, Bank of Baroda. I think it's showing some signals of strength over here. You look at the monthly performance, it's almost positive, flat to positive, and on a weekly basis also, it's not corrected the way many of these stocks have. So I think it's trying to give you an indication that probably some sort of a short-term uptrend could happen in PNB. I think the investors' purchase price is 11.25, and the stock is around 50 rupees down from the current from the purchase price. So I think it becomes a decent buy at current levels. You can average out your holdings, almost 50% to 100%, and then I think if what in the current chart structure holds true, then I think you could probably look at 11.50 once again on PNB.
Dhruva Mahesh has written to us from Chennai. He says he's 39 years old, earns about 20 lakh rupees an annum, and wants to know what should be the ideal cover for a term plan. Rose.
Yes, from a human life value perspective, Mr. Mahesh, I think you should look at almost about 15 to 20 times your annual salary. So in my opinion, you should have about 3.5 to 4 crores cover. Especially when the term plans have become relatively cheaper. They've almost become 40% cheaper than they would be about 5 years back. So this is a very good time to actually start a term plan because intense competition has brought down the premium significantly. I think looking at your age, you might end up having to spend about 50 to 55,000 rupees to get a 4 crore cover. And if you look at HDFC Click to Protect plan, that would be the best one. Their claim settlements are also reasonably good. Almost 96% of claim settlement is one of the highest in the industry. So HDFC Click to Protect and about 3.5 to 4 crores with about 50 to 60,000 of premium would be the right thing for you to do.